The last time the weekly RSI on the S&P 500 was this high was right before the COVID crash in 2020. Now, does that mean we're going to see a crash of this extent now just because the RSI is up here? No, but it's still some type of a signal that shows that we're very overbought at the moment. It has not been this high in 4 years now, which just goes to show how strong this rally has been since that October 27th bottom. We saw continuous upside week after week after week, all the way up to where we are right now. And personally, at least from my read for this week, I'm still a short-term dip buyer as long as we can remain above key levels. And by key levels, I'll show you here on the 50-minute, I mean retest of the breakout range until this retest, and I'll get rid of this RSI for you here, but until we see a breakdown of the resistance that we crossed. So it's right in this range right here, this resistance we crossed, and I'll show you just on the chart with this horizontal ray. Until this breaks down around 517-ish, we will continue to see dips, at least in the short term, get bought. And again, if you are antsy to short, you need to wait for confirmation. Personally, I've been waiting for confirmation, but I've yet to see that confirmation yet, hence why I haven't added to my shorts. Personally, I've just been taking 1 to 2, maybe even 3 a day long setups, as every single dip so far has continued to get bought. This will continue to be the case as long as a level like this around 517 holds, because that will just lead to more continuation. If we were to see a breakdown of around this level and price were to go back, let's say around 516, 515, that would be a failed breakout of 1 month, around 5 weeks actually, of consolidation that we had in this relatively tight range for the S&P 500. You can see we consolidated all within this range for about 5 weeks, and then finally last week, after FOMC, we saw a breakout above. So as long as we remain above this breakout, around, again, 517, it will continue to trend to the upside. A breakdown back under would mean this is a failed breakout, and failed breakouts are very bearish because that shows bulls are not supportive of price holding above that breakout level. And in that case, we would see a lot more downside. It would actually go very quickly to around 510, 509, like within a session or two, if we did see that breakdown back below 517. Something to watch for in the future, since I believe that will be the case. Timing wise, we'll have to see, because again, if we do retest it this week around 517, which I would not be surprised to see, this level is likely to act as a very strong support since it's a retest of the breakout, like I just said before. So you're going to expect to see a very strong bull versus bear battle around here. And again, those dips, at least to around this range and anything higher, will continue to get bought in the short term as long as we stay above, and as long as we don't see some type of a failed breakout confirmation, which would be likely an hourly close back under around 517. So that's what I'm watching for the S&P 500 this week. Now, very similarly on Nvidia, we have a bear and bull bias as well. You can see here, I have this purple box here on Nvidia, and we broke out of it as of last week. This is a supply zone, now demand zone, since we are above it on not only the daily, but also the weekly candle. So any dip this week into this range is likely to get bought up until we see an hourly close, again, similar to an S&P 500, below this range, which is roughly around 908.32, until there's an hourly close below, which would lead to this gap fill over here, which would be a signal of a loss in momentum as well. Until we see that happen, the short-term dips will continue to get bought like the S&P 500. So watch this range here. It's relatively wide, but Nvidia is pretty volatile. And the way that I derive this is because we've seen numerous rejections off of this range so far. Over here is where we had the close of the day before it gapped up, and then had a hard rejection afterwards. And then over here, we saw another rejection after the overnight session here that led to some more downside. And then over here, we had a very high wick on the hourly to signal a rejection all the way back under the entire range. And it showed more downside. And then intraday, there was also rejections here, but then we finally broke out on Friday of last week. So as long as we can stay above, this will continue to bid in the short term. And flow is actually very supportive of that, especially near end of day on Friday. You can see here a lot of sweep orders coming in. These are being bought to open, and a lot of these have either around the money strikes or even out the money strikes, like this 1,000 one over here, another 1,000 for the April expiration. These also have a lot of premium, like 2 million in premium, 1.1 million in premium, et cetera, and these are continuous bullish sweeps, which is why you see them highlighted in purple like they are here. And whenever you see those, that's a signal of momentum, in this case to the bull side, since they are call sweeps. And all things considered, these have relatively short-term expirations. You can see this is the weekly expiration for this week, 328, and then also the April OPEX, only a couple weeks from now as well. So very bullish flow to end the day on Friday. If this continues to be the case, especially if it continues to be the case, if we have a retest of this range and we see a lot of that bullish flow coming in, that dip is likely to get bought. It's a nice confirmation buy signal as well. And you can use risk, as in a break below around 908, as your risk for that potential long setup. In this case here, since they break below there, would be an end to any short-term upside. Otherwise, as long as we can stay above this box, then like I said, those short-term dips will continue to get bought. So this is something I'm watching for this week. The next key resistance from here is obviously where we had this hard rejection from about 2 or so weeks ago. That's around 971. You can expect some type of profit taking up there, but we do have a relatively bullish short-term structure beyond the fact that we broke above this purple range here, because there is a double bottom on the 15-minute. So we had a nice wick over here, followed by the second bottom over here for the double bottom completion that led to more upside afterwards. So in this relative range, it is looking fairly supportive. Obviously, if you go to the daily chart here, it looks incredibly overextended since we had this major breakout of consolidation over here. But I'm looking just at the short term on Nvidia. I'm not interested in trying to take any long-term bets on it, since that would be foolish after seeing it continue all the way to the upside and go way longer than any of us can predict. So no reason to try and predict a complete trend reversal when it's been trending up for so long as it has. So short-term setups are likely to be your friend here, and having a good idea of a directional bias, kind of like we have here with this box, is going to help you as a trader. So I will watch this box this week as well. And one last thing I do want to mention is something interesting, kind of under the radar, that I saw on Friday of last week, is we had not only a daily but a weekly close above this downward trend line on the dollar. Now, the dollar has really done absolutely nothing to the market, as we have just been consolidating recently. The last time it really had an impact was during that correction in the fall of 2023. So around that September, October time period, where we saw it really start to uptick, and it did certainly hurt equities around that time period. But it's mainly been either falling or just consolidating ever since. However, there's a big change recently, and that's as of Friday's close, we had a confirmed breakout again on the daily and weekly. So that shows some significance. If you're unaware, typically when the dollar has some type of extended upside, it leads to weakness in equities. And of course, if equities are weak, we're going to see downside in the S&P 500 along with it. So something that I'm looking at here is if it's able to hold above this breakout. If that is the case, we can start to see, especially heading into Q2 of 2024, we can start to see some weakness overall in equities. Again, as long as it can remain above this downtrend break. Just something to watch. This is the early stages of it. I don't expect it to have that much of an impact on equities until it really starts to crank, let's say like past 106, past 108, etc. But this is the first signal that 106, 108, even 110 are possible in Q2. And if that were to be the case, that would lead again to that weakness that we could possibly see. So this is just something to monitor as we go into Q2 here, but certainly something you want to keep a tab on, since it can have implications on the overall market if it really starts to crank from here. So other than that though, as always, appreciate you guys watching this video. I'll see you next time.